You know, I was very, very lucky with Tesla stock. Why do I say this? I have lost money on Tesla stock, so I guess that's not really that lucky, but I did sell nearly half of my stock when the price hit $1,200 US. So in the end, I didn't really lose much money. In fact, I lost next to nothing because of that. And that was luck. Tesla stock could have gone up when that happened. I really just took a gamble. But realistically, many people right now are sitting on losses on their Tesla stock. So what's going to happen? What are analysts saying? And what do I think will happen over the course of the remainder of this year? Hello, my friends, and welcome to the channel. Great to see you. This video is for you US investors, you guys in Europe, not for Australians who I can't advise at all on their investment decisions. However, you Aussies, I can tell you what I've done. So stay on to watch this video and you'll see what I think is going to happen. Now, right now, I just bought more Tesla stock. In fact, I sold some Google shares, I sold some Alibaba shares, and I invested money from both of those companies into Tesla. In fact, I also sold some of my Xpeng holdings and put that into Tesla as well. You're probably thinking, you're crazy, Viking. You're insane. I mean, everyone's saying Tesla's stock price is going to go down, right? It is, yeah. I mean, sentiment has been trending that way this year, partly because, I don't know, people seem to have turned against Elon Musk. It seems to be the fashionable thing to do right now to say Elon Musk is a fascist. And he's worse than who? Putin. People are saying that. Like I've read this all over the internet right now. Popular thing to do right now is to say Elon Musk is an extreme right-wing lunatic who wants to have thousands of kids and own Twitter and dictate to everyone what to do, and that's the trend. But the thing is, these kinds of emotions and trends are cyclical. They don't last. Now, Tesla's necessary 2H rebound or second half rebound is a compelling opportunity for investors, says Deutsche Bank. And I, for one, as you can see by my actions, 100% agree. Tesla is presenting a compelling opportunity for investors. And frankly, I think right now is one of the best times to have bought Tesla stock over the past 2 years, maybe the best. And interestingly, Deutsche Bank analyst Emmanuel Rosner, who believes the company's third and fourth quarters of 2022 will be a crucial time as it fights for its delivery goals, also seems to agree that Tesla's stock price will rebound this year to previous highs, and in fact, maybe even surpass those highs toward the end of this year. That would mean Tesla's stock price would be going from $700 US to over $1,200 US by the end of the year. That presents a pretty big opportunity. Tesla maintained it would aim for a 50% increase in delivery growth in 2022 compared to 2021. I, for one, think that they will achieve that. However, this goal took a drastic turn for the worst when Tesla's most active production facility, and the one where it makes most of its profits, or maybe all of its profits, I think all of its profits, Giga Shanghai in China, was shut down thanks to the COVID pandemic. And technically it was only shut down for 3 weeks, but the truth is that didn't really happen. It was really shut down for closer to 6 weeks because 3 weeks were just sort of like, not even half production really. They were running at about a third of production over 3 weeks and they were shut down for another 3. So Tesla lost a huge amount of sales growth and momentum over that period of time. Since then, obviously they've ramped things up massively. If we look at their run rate now, it looks astounding, but more is going to come. Now, what do they sell, right? Nearly 80,000 EVs were produced by Tesla in China in June, which is a record, an incredible number. But Tesla is shutting down the factory in China, and that will have an interesting effect. Now, the shutdown earlier in the year in China contributed to Tesla's first time not reporting growth in deliveries in 9 quarters. 9 consecutive quarters of growth in a row. All of a sudden, the last quarter, there's no growth. The last time Tesla delivered fewer vehicles than the previous quarter was the first quarter of 2020, when the end-of-year delivery blitz outlasted in Q4 2019 the automaker's delivery performance in Q1 of 2020, which is frankly to be expected. That's normal for the automotive industry. This development also set Tesla back from its 50% growth goal for the year. Tesla will easily eclipse the 1 million vehicle production rate for the year with relative ease, barring any other long-term shutdowns. It will need to outpace its first half by a considerable amount to attain its 50% growth rate. The company's ability to turn up production and deliveries in a pinch is putting investors in for a real opportunity, said Rosner of Deutsche Bank. Even in the event the second quarter margin misses, we think investors should take advantage of the stock pullback to get involved, given margin pressure faced in the quarter would be temporary and longer-term operating leverage stays intact, said Rosner. Now, I'm not going to bore you with what you already know. You already know that Tesla's ramping up at Austin, Texas. You already know they're ramping up even at Fremont as well. You already know they're ramping up in Germany. But not many people know that more important than all of those, by far more important, is that they're shutting down the factory in China in order to go from producing 15,000 vehicles per week to 22,000 per week. Adding an additional 7,000 vehicles produced per week is way more important than the number of vehicles that they'll produce in Germany and Austin over the course of the remainder of this year. And that will lead to Tesla, in my view, selling 1.5 million EVs this year, which would give them the 50% growth rate that analysts expected based on what Tesla said they'd do. Therefore, yes, I believe it will happen. Yes, I bought more Tesla stock for this reason. Not only this reason, this is one of them. And why, yes, I recommend you do as well. Of course, not if you're an Australian. If you're in the US or Europe or anywhere else in the world, I strongly recommend you do your own research, make your own mind up, and try your best to invest a certain amount of money every single week. Take a certain amount of your pay packet out, maybe 10%, set it aside, put it straight into your investment account so you can't touch it. And then, my friends, 10 years time from now, you can end up being a very wealthy person. Now, what I want to know is, what are your predictions on Tesla? What do you think they're going to do this year? What do you see the stock price doing? What are you betting on is happening with Tesla? And do you see any US automaker like GM or Ford starting to eat into Tesla's market share this year in the United States? Thank you for watching the channel and thanks for subscribing. It's great to have you. Have a great week. Bye-bye.